Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePaola and Johnny C. live on Real Radio.
That's right. It's another happy South Florida day here in South Florida for a new show of Florida Talk Real Estate today. That's right. You know what? Navigating the real estate market today can be tricky, but you know what's trickier is not having Johnny here, being Jimmy D, losing all my show prep. I just found it. Oh, awesome. I just found my show prep. I thought I just lost all my show prep. I thought I was going to have to punt for a little bit, but now I don't have to do that. So that's good. I guess it's turned into a good day. It's been a little crazy already this morning. How are you guys doing?
Who?
Okay. You want me to do it the Johnny way? Okay. We're going to go around this circle and go around the whole thing. Okay. First, but not first, and not last either, okay, is Ross Komarinetz from Brightway Insurance, the Juno Beach office, the only office. And we have a good story to talk about with you, Ross, today about insurance coverage and people getting notices that their insurance is being canceled. And it's tying into a big news story that happened this week. Crazy things happening in your market right now, huh? In your industry?
That's right. You know, if just a little public service announcement, go out and give your insurance agent a hug, because they are getting their butt kicked right now.
I hear you. We're going to talk about that and how it's affecting the market. So right now, the insurance industry is in total turmoil as far as I'm concerned. Companies are just fleeing and going bankrupt, and reinsurance is being threatened not to insure the insurers, and all kinds of things are happening there. The state is thinking about bringing in state legislative action in order to try to calm the insurance industry down. So we got that going, right, which is raising people's mortgage payments and premiums and everything. And sometimes it's blocking them from buying a home they want to buy. So that's happening. Then we got the mortgage. Then we got the mortgage turmoil going on right now. So what's happening in the mortgage company? We have thousands and thousands of layoffs of people across the country because there's so little refis going on right now because the interest rates are so high. And it's really starting to hamper down. These interest rates are really starting to hamper down the buyers. And we've got Mike Rauch here from the mortgage firm who's been with us for a long time. And Mike, you're not having actually all bubblegum and roses and unicorns and rainbows, are you?
No, but I've come to accept my fate, which is basically you have to have real talk with people about rates and and let them know what's going on. And so it is what it is. We're still getting people qualified into payments they can afford, and that's kind of the main goal. But it's been a tough year as far as mortgages go.
Yep, and it doesn't look like it's going to be getting much better than right now. So that's all in turmoil, all that stuff, right? And then we've got, and I'm so happy to have him here today. We have a special guest, AJ Hollman. AJ, I always forget the name of your appraisal company, and I'm very embarrassed that I have to say that on air.
It's Touchstone Real Estate Services.
Touchstone Real Estate Services. Let me tell you, AJ, were you born and raised here, AJ, in Palm Beach County?
Yes.
Yep, that's what I thought. AJ's born and raised in Palm Beach County, so he knows South Florida. He knows it well. AJ, when he puts his appraiser hat on, he's got a lot of stuff going on. You have to, AJ, because let me tell you, I see so many back on markets and price reductions right now compared to 2 months ago, 3 months ago. And that has to be a byproduct partly from appraisals not coming in.
I think, for sure. There's a lot of that. It's I pulled some statistics to talk about today too. It's all about the inventory. It
really is. It really is. So we've got, I want to talk to you about that today because that kind of rolls right into the statistics I want to talk about. So we have the appraisal industry, the mortgage industry, we have the insurance industry right here, and all representatives, all in the trenches, working every day, not part-timers, right, doing this all day long as true professionals. And this is where we are right now. And now I'm the realtor.
Wait. What about you, Jimmy D?
Yep.
Yes,
So now
yeah.
comes the realtor part. So the realtor part has been pretty crazy this whole week. All I've been doing. Remember that movie with the Australian hulking guy? I can't remember his first name, but he had the big knife.
Dundee?
He's like, "That's not a knife. This is a knife," right?
Yeah,
Remember that
Crocodile
guy?
Dundee.
Crocodile Dundee. Remember the what is it? The hippos that run around and stamp out fires. Anytime there's a fire, there's like this animal in the jungle that comes out, and it actually is like the firefighter and stamps out the fire. It was a running gag through the whole movie.
I feel like you're
I think it
talking
was
about
a rhinoceros.
the
It might have been
gods.
the
The
rhinoceros.
gods must be crazy.
Oh, was that Gods Must Be Crazy?
Isn't it? Isn't that from that movie? The gods must be crazy.
It might be. It
I
might
don't
be.
think
I
it's
can
from
see.
Crocodile Dundee, and I haven't seen The Gods Must Be Crazy.
Yeah, I think
I'm gonna say
The
it's
Gods
from-
Must Be Crazy is from like the 80s.
Yeah, well, this.
Yeah.
Well, I'm old, AJ.
No, I saw it in the movie theater. I'm right there with you.
Yeah, but I saw. Maybe it was the Gods Must Be Crazy. Mike is our like every answer man. Like our.
I just don't remember that in Crocodile Dundee, and it seems like
Me
something.
neither.
I think it was Gods Must Be Crazy. Now that you're saying it, the guy with the Coke can. So
Yes.
So
bottle.
the Coke bottle.
Yeah.
So anyway, that's what I feel like. I feel like the rhinoceros or the whatever animal it is just putting out the fires and then running to the next fire. That's all I'm doing all week long. We had appraisal issues. We had negotiation issues for the first time. We might be litigating something. I'm not going to get into it today, but it's kind of hairy. So it's just been, the real estate market has been very crazy. Buyers are very much on edge. The sellers are getting a little on edge too. So there's a lot going on with that. Just want to, since we're going through, I just want to give some shout outs to some people who have come to watch us. We are live on Facebook. We're live on YouTube, and you could call us live on air if you want. All you have to do is dial 877-927-6969. Jimothy, the producer extraordinaire, will take your name and information and tell them what you want to talk about. You don't have to talk about the subject we're talking about. Just give us a call if you have any real estate questions. We got the whole industry here. So why not give us a call and we can answer your questions. But shout outs to some people. Elaine, happy Saturday morning, and thank you for saying hello, everybody. Johnny's not here today, though, so you'll have to catch him next week. He's on a much-deserved vacation with his family. Susan, good morning. One of our happiest customers of the year, one of the happiest stories. Susan, we're going to go out there and shoot a video soon, and happy Saturday to you, too. And Elizabeth, thank you for checking in every week, loyal to Mike. Thank you so much. And Francis, good morning to you. And George, I'm so happy to see George here for just a few moments. George is one of our former customers, and he moved up north. And I'm so happy to see that he's here. I follow him on Facebook. I hope you're doing great. It looks like you are. And finally, John, thank you so much for checking in today. I never got a call back from that guy, so I think his case is probably taken care of. And Susan just responded, the person that bought her house this year. Yes, I am very happy. So thank you, Susan, for the feedback. So, but thank you guys for checking in. And you can watch our show, even if you miss it or you're getting out of the car, just like, I'd like to hear more of that. All you got to do is go to our YouTube channel, Florida Talk Real Estate LLC, or you can go to our Facebook page, Florida Talk Real Estate, and you can go there. And all of these podcasts turn into video podcasts that are, in the library. We have hundreds of them on our YouTube channel, so just check it out.
You could just binge this show. How long do you think it would take to get through?
Oh, yeah. How long would it take to binge it? It would be kind of, if you're a total real estate wonk, it would be kind of cool going back to like the 2012, 2013 shows and just hearing what we were talking about then, because it's so different than what we're talking about now.
Yeah.
So it is kind of interesting how the market's changed so much in the 10
years. Do they go back that deep on the archive there? Can you access those shows?
Yes. If you go to the iHeartRadio app, I think it does go back to 2012. It does. The iHeartRadio app, not the
YouTube not on the
Facebook.
videos. Yeah.
So, good morning, Robin, and good morning, Mom, and love you, and good morning, Robin. I'm not saying I love you. Bruce, your husband, I don't think would like that too much. But anyway, Robin and Bruce just closed on a deal with us. We helped sell one of their relatives' condos, and thank you so much. We had a smooth closing and everything went great. And the thing that made me happy most about that story, the house was an old dated condo, right? It was down in, I think, Pembroke Pines, right? It was a dated condo and it really needed everything. And it had wallpaper everywhere. And wallpaper is not fun when you're trying to sell a house. A lot of people are turned off by that because they have to replace it, and tearing out wallpaper is not fun. So
AJ,
anyway,
do you give an adjustment for wallpaper?
well, sometimes you have to. Almost.
No, I do not.
AJ, right? So what happened was he did take the wallpaper off part of the house, and then skim coated everything and then painted it, and it came out really good. But to do the whole rest of the house would have been a Herculean task. So he asked me if he should finish the rest of it, and I said, let's put it on the market at the price we got, and let's see what action we get. We could always change our mind later. And in about 5 days, we got a great offer, above asking price, and closed on it last week. So thank you, Robin.
Do you know if those buyers, Jim, have plans to kind of like redo? Like, it brings up the question of like, is it worth redoing things when it's almost certain that the new buyers are going to be redoing things?
I'm going out to a house right now, right after the show, Mike, out in the acreage area, where we're going to be talking exactly about that. It's a 1992 house, frame house on a nice lot. And they're telling me that the house has not been, really updated over the years. So it depends. It really depends on what's happening with the house. So my advice overall is, the first thing is, you got to deal with the structural issues first, right? As long as everything's functional, but it might be dated, right? You got to make sure that your roof's okay, that you're structurally sound, because really that's where the money should be put aside first, is for those kind of issues, especially because of the insurance problems that we're having now. And roofs are expensive right now. So the first thing is you have old kitchen, old bathrooms, old flooring, needs a paint job, right? But your AC is old as dirt, your water heater is leaking, and your roof is, 25 years old. Okay, don't start renovating the inside of the house. You got to start taking money and be prepared to deal with those structural issues. Not necessarily buy a new roof, but to put the money aside to deal with the issue. And I could talk off air about like how we do that, on our team, how we negotiate that. Would you agree with that, AJ? If you had super old roof and like AC old as dirt, but the house is dated but functional?
I mean, dated but functional. I think, as Michael tell you, that it's the things that are going to interfere with your ability to get a loan that are going to be the first things that need to be addressed. So if it's something where it's going to have a long-term structural issue, that's number one. You got to deal with that stuff first.
Yeah. And then you have to decide, like, if you're trying to do a renovation to sell it, a lot of times, in my opinion, like, I have a person that wants to sell a house that's dated. They're thinking about fixing it up. But when they buy their new house, they want to buy it dated so they can fix it up and make it like they want, right? So the thing is like, they lived in that other house, the house they're selling, for over 20 years, and they never updated. They always talked about, but never did it, right? And now they're looking forward to buying their new home and starting a new chapter of their life. Going back at this point in time to go ahead and renovate the house and take the dealing with the contractors and the supply issues and all that, and dealing with that and the prices, and trying to deal that to sell your house when your heart's not in it. Your heart was never in it to renovate that house, but your heart is into renovating the new home because you're excited about that. I'm just using this couple as example. Focus on the new home. Sell the house which you can get, as long as some things sometimes it is worth putting money into. Okay, sometimes it's worth doing a fresh paint job on the interior of the house or something, or doing some steam, pressure washing and getting the cobwebs off the shell of the house and stuff like that, and make the walkways look nice. Maybe that kind of stuff, but usually like ripping out major parts of the house and redoing it, usually I don't think it's worth the hassle for a regular person that isn't a flipper.
I mean, for the most part, I agree with what you're saying, but the exceptions I would say is when somebody's got something that's a particular negative. That's what I always talk to people about to say, look, like I was in a house a few months ago and their kitchen counters were dated for mica. I said, look, the one thing I would really recommend is maybe change out these counters if you're getting ready to sell it, because it's one of the main focal points of the kitchen, and the rest of the kitchen's not bad, but these counters are just making your whole house look a little worse, you know. But yeah, painting, taking away negatives, that I always see as being a good thing. But going in there and dropping $20,000, $30,000, $40,000, usually you're not going to get it back on the resale for that.
Yes, and let's just talk about that for appraisal purposes. Just a little appraisal thing, not any specific house, okay? So you have somebody that's in a neighborhood, and let's say it's one of those cookie cutter neighborhoods, so you can compare apples to apples, okay? So I have Model A in Signature Community, okay, and I live on Apple Street, okay, and I saw that somebody has Model A in Signature Community on Baker Street, same square footage as mine, everything built the same year. It's a 20-year-old house. They just sold their house for X amount of dollars. And I go, wow, well, I just put in a $50,000 kitchen in my house, and my house is worth way more than that other house. Is that how appraisers look at things? Like, how do you judge, like, if almost everything else is equal, but one's got like this, you know, upgrade in just one room compared to the other house? Like, how much value do you get for that?
I mean, it's really, you got to remember, so an appraiser has got maybe 15 fields in their report, and condition is one, and I add an upgrades line, and we bulk everything into there. And people always see the positive thing about their house, but they never see the negative. So, you know, number one, yes, you got a very nice kitchen. Maybe you just paid 50 grand for, but the kitchen you ripped out was worth something, you know. So that's something people don't think about. Maybe the existing kitchen was worth 20,000 out of what was left there if you hadn't touched it. And then the other thing is, you say that they're going to be equal, completely equal, except for this one thing, but they never are.
That's true.
Maybe, you know, one of them's going to have a nicer yard, landscape, hardscape. You know, bathrooms are a little different, floorings are a little different. So we try to look at that and balance it all out to the best of our ability. And it's much easier to look at a sale and say, okay, that sold for this much more than normal, and it had this super nice kitchen. That's what that super nice kitchen is worth. But for you to look at the other sales and then say, well, my attribute cost this much, so I'm just going to add that on top, maybe the market will see it that way and maybe it won't. So the answer is we do our best to estimate what the market reaction is going to be.
That's interesting. I hadn't thought about it in that way, AJ. So if you see a comp that sold higher than the other comps, you're looking for the reason why it sold that high. And so that could be something to do with its condition or its location. And interesting.
And when you're writing an appraisal, it jumps out at you because you've got all these other comps in there. You got all your statistics, all your adjustments that you did on your first pass, and then one of them's high or one of them's low. So you pick up the phone, you call the realtor. I do this all the time, and I'll say, what am I missing? You know, what is it about this place that was, you know, made it worth less or made it worth more? And 9 times out of 10, they'll have a ready explanation for me. Oh, it actually had some problems with the electrical or the plumbing or whatever on the low end. Or, boy, that place really had a super nice master bath, and that's why everybody kind of liked it a lot more.
Nice. And then you can just use that to get a market value on what that particular feature should be worth. That's
exactly.
I hadn't thought about it that way. I was thinking more in my mind, like, hey, upgraded kitchen, that's worth X amount of dollars. But you're saying it's worth X amount of dollars in this neighborhood on that style of home.
In this market, it's in appraising, it's all about market reaction. And that's one of the things they teach you in classes. It's not what you think, it's what the market thinks. So I may think that quartz counters are much nicer than granite, but in that neighborhood, if you see consistently that there's no value difference in the resale, then the market doesn't see a difference.
Yeah, and you know, we're going to get into more appraisal stuff because I learned something just recently with an appraisal reconsideration I did. just recently, and Mike and AJ and a couple other people. I talked to them, but a bunch of other people also, and learned a lot. I learned more things about appraisals, and that's one thing I love about my profession. You can learn stuff all the time. I learned some stuff with Ross. We're going to talk about that today with another customer. So there was a lot of teachable moments this week in my life, which has been pretty cool. But I want to kind of wrap up just this segment to go over the latest stats, because I got to tell you, they are pretty amazing. The April statistics came out from the Florida Realtors Association, county by county. Now, I was so busy this week, I did not have a chance to check all counties like I normally do every month. So I'll do that for next week's show. But it's such an amazing figures right now that I feel like it would be a shame not to talk about it. I wouldn't be doing my duty, if you will. So let's
using amazing in what sense? Just that it's astonishing, or is it
yes,
amazingly in a good way?
Very astonishing. That's astonishing is a good word. Let me just get to it. Hold on, I'm trying to find it here.
Get ready, Ross. Here come the numbers.
Okay, here we go. Okay, now this is for Palm Beach County only, and this is for only single family homes. Okay, so in Palm Beach County, we had a median sale price this month of $601,000. Now, we had never broken 500,000 until late last year, or sometime last year. That's the first time the median ever hit 5 something, right? It wasn't we blew past 2006. I think 2006 we're in the 480s or something like that. So that blew the figures out. And the other thing that happened, so just to put it in perspective, year over year, we were at 466 for the median sale price a year ago, and now we're at 601. Last month's median sale price, sorry, I got to get my grannies out. Sorry about that. Hold on. Last month's median sale price was $541,000. At the beginning of the year, it was 526. So we've gone up like 12% since January.
Right. And what'd you say it was? What'd you say it was? April of 2021?
April 2021 was 466.
Wow.
Yes.
That is shocking.
Okay, it is. Wait, and it gets more interesting. Here's the other thing. The amount of sales. So this month we sold just under 1,500 single family homes in Palm Beach County closed. A year ago, we were at almost 2,000. So we're 500 short, right? Which is about 25% below what the amount of sales we did last year. Okay, so that's interesting.
And last year was even a little bit
last year
low, right?
Yeah, last year we were getting to the single digits for inventory. So let's talk about inventory just real quick so that we have a basis so people understand. Months of inventory is based on if no other homes are put on the market, how long would it take based on consumer demand right now to sell all the homes and get down to zero? A normal market is 6 months. 6 months means it's not a seller's market or a buyer's market. It's just kind of even Steven, right? Nobody's got an edge, right? It used to be said 6 to 9 months a long time ago, but 6 months is pretty much the seller market, the middle ground. Right now, we are at 1.4 months. So that's what, 30 days and then a half, 45 days inventory we have roughly, right? 45 days inventory. That's it. Now, the inventory has not decreased compared to last year. We're still at 1.4 months. Okay, that hasn't changed. Some of these, I just did an appraisal for a house where the months of inventory was 0.67. So that's like 20 days inventory.
In that
right?
neighborhood.
In that particular neighborhood, right?
Yeah.
So that number is pretty astonishing. Now, I think this shows a couple of things. We might be wrong about this, but we might be looking at this month and maybe next month as the peak. And we might be at the tip of the snow cap now. I always talk about on the show, where are we in the market? And I say, think of Mount Everest and you see where all the snow caps are. we're hovering around in the snow caps, not below the snow caps. We're in the snow cap part, right? So I can't tell you if we're on the left side of the peak or the right side of the peak necessarily. But right now, we're definitely on the left side of the peak, but I'm wondering if we're right at the peak right now, pretty close to. What do you guys think?
I mean, I think it's going to be, I think whatever numbers come out like in June or July, just because that'll really factor in the higher rates, because I think all those home sales in April are still dealing with, March and February interest rates. So
That's true.
That'll be interesting, I think.
That's true.
Good
I
point.
ran
So
some stats. Sorry, go ahead, Mike.
I was just going to say on Ross's point. So those people that closed, right? So we're talking about homes sold. So they closed in April. Yeah, they probably had their rates locked since March, maybe even since
February.
February. Yeah.
Yep.
And so rates have continued to go up.
I ran some numbers because obviously we're with the rates going up, we're looking to see that peak, or are we on our way down, or where are we at on a regular, that's my biggest concern right now as an appraiser is the market turning, right? So I ran some numbers this morning. Mine are a little different than what the Realtors Association put out. The trends are probably going to be the same, but I just want to put out, or mention that when you're talking about the number of months of inventory, don't forget that the way that statistic is developed is looking at the sales volume, and that's part of that ratio. So what I'm looking at, because that sales volume can change quite a bit, I'm just looking at actives, because to me, it's all about competition. When there's no competition, then your prices are going to keep surging. It's going to be a lot easier to sell that house. So I started on April 24th looking at the number of actives and tracking them through MLS by county, just for Palm Beach. So on April 24th, there was 1,736 single-family home actives. When I ran it this morning, it's 2,088.
What were the two numbers? I'm sorry, I missed that, AJ.
1,736, and now it's 2,088. 2,088. So
That's
it went up 20% in less than a month. On condos, it went up 17%. And this is just the number of homes that are currently active, not stuff that's under contract, not stuff that's sold, just actives.
That's interesting because Scott, who's going to be calling in later, Scott Spainhauer on our team, he's going to be doing open house and calling in. He was asking me yesterday when we were going over these statistics, how could we have less sales but the inventory remain the same, right? Because he was like, the inventory should go up, right? If you have less sales, the inventory should go up.
Well, it depends on what's coming on market.
Right. What I said is you're not taking in a factor that some houses are going to sell during that period and other ones are going to come in, and it depends on the ratio between those two and how the inventory. So what we don't know yet on those, that's very interesting though, AJ, because this is what anecdotally I was thinking, is that we're seeing more people come on the market a little bit more. I don't know what's happening now because I thought it would stiffen up a little bit and have it even less people come on the market. But I think some people are coming on the market because of the buffalo herd mentality. Like they think the party's over and that if they're going to do it, they're going to do it now. And they might have missed out a little bit, but
I definitely think that's happening. But the other thing that drives this is things not coming off the market.
Right. That's the second component, which is that houses stay on the market longer. We won't know for a month or two about days on market. We might see days on market increase is what I'm expecting. And what we're seeing there, AJ, talking about days on market, because that's a very important part. And actually, I think that's probably going to be a bigger component than people putting their houses on the market. I think houses are going to stay on the market longer, more than we're going to get more people putting their houses on the market. But
because they have competition. Like, I was looking at Jupiter Farms. I looked at a house there a few months ago, and at that time, there was only 2 competitive actives in the entire community. I went back and looked at that same competitive market this last week, and there was 8. So it's, whether it's because I don't think it's a bunch of people came on market so much as The ones that come on market are going to sit there longer.
If your house isn't priced right, it will sit. We have tons of people still selling 7 days, 4 days, 3 days, 0 days. We're doing it too. But if you miss the price, you'll be on the market 60 days, 100 days. There are houses that are on the market more than 100 days, even in today's market. It happens. I think we're going to see more longer days on market. I agree with you. We really need to take a break. So we're going to take a break. And on the flip side, we're going to come back. I want to get into Ross's stuff first, the insurance, because there's a lot of stuff going on with that. But we're going to be talking about the interest rate and the market, what's going on in the real mortgage market. We're going to go back to more appraisal stuff because I think that's going to become more and more common. And also, if you're thinking about putting your house on the market or buying a house, this appraisal stuff is going to be all the stuff today is going to be super valuable. Just want to say one thing. Pat gave a shout out to Ross, Pat Buckley. Pat, thank you so much for being such a loyal fan of the show. And he said, good morning. Good morning, all. Ross, thank you for the quote this past week for his homeowner's insurance. I will be moving forward with your policy you quoted this week. Thank you so much. So thank you, Ross, for doing another great job for our customers. Pat was one of the people that got notice that his insurance policy was being dropped or changed or something. And then he came to us and Ross was able to get him something else. So congratulations on that. On the flip side, we're going to be talking more about homeowners insurance. And if you don't know what's going on with homeowners insurance, let us tell you what's going on, because this stuff is going to be very important. If you own a home or a condo, you got to check out the next segment.
What's a Real Radio podcast? It's Real Radio on demand. Find your favorite show at realradio921.com.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
Hey there, everyone. It's going to be hot and humid today with high temperatures around 90 degrees. I'm CBS 12 Storm Track meteorologist Zach Kobe. Factor in the humidity levels. We're talking about heat index values between 97 and 105. Better rain chances to our north, Indian River, Okeechobee, St. Lucie counties, but a straight shower storm this afternoon is possible.
This report is sponsored by Discover. With prices soaring at the pump, Discover has your back with cashback. Use Discover to earn 5% cash back at gas stations and Target now through June on up to $1,500 in purchases when you activate. Limitations apply. Learn more at discover.com/rewards.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
This is Jimmy D, not Johnny C. Johnny C's on vacation this week. Sorry to disappoint you guys, but we still got a really great show with tons of really good consumer information. We are the #1 resource for all things real estate down here in South Florida. We've put together on this radio show a really spectacular team of professionals that are down in the trenches, working here every day full time, just doing what they need to do to get people help in the services they need. First up, we've got Mike Rauch from the mortgage firm. How are you doing, Mike?
Nice. I got first billing this time. I'm doing great.
You got this segment. You got first billing. Nice. Hey, how many states are you licensed now to do mortgages? I know Georgia and Florida.
Yeah, I'm personally licensed in Georgia, Florida, Georgia, Virginia, and Colorado.
Now Colorado? How did you do the Colorado thing? What happened there?
I just had a client who needed to refi a property they had in Colorado, and so when there's a loan opportunity, I'll just go get licensed.
You got to know that about Mike, right? A direct lender right here that could do 4 different states. So Florida, Georgia, Virginia, and now Colorado. Something I learn every day. I just found out about this right now live. So that's cool.
And then the mortgage firm, of course, we're in. I don't know. We're ever growing as far as the states we're in. No, it's a lot more now. It's in the 20s for states that the mortgage firm can write loans in. So.
That's awesome. We're going to talk a little bit more about that. And then we've got, of course, Ross Komarinetz from Brightway Insurance, the Juno Beach office, the only office that exists for Brightway Insurance.
Good morning, everyone. Good morning.
Good morning. Are you getting ready for your kayak, or not kayak, but I almost said waterboard. What am I saying? Not a waterboard.
Paddleboard.
Paddleboard, not a waterboard.
Stand-up paddle.
Stand-up paddle.
Ross is going to go through waterboarding in order to raise money for the charity. Can you tell a little bit about the charity, Ross? And we have it pinned at the top of our Florida Talk Real Estate page. So anybody that wants to make a donation to this cause, just go to our Florida Talk Real Estate page. You'll see pinned at the top Ross's charity event. Can you explain what's going on with that?
Yeah, it's an event called Crossing for Cystic Fibrosis, and it benefits the charity called Piper's Angels that does a lot for people with cystic fibrosis and their families. And it's an 80-mile paddle from Bimini, Bahamas to Lake Worth Beach. And we leave at like midnight on Saturday night, and not this Saturday, but in June, and paddle all night. Sun comes up, and then you probably got, about 5 more hours or so, 6 or 7 hours.
Talk about torture. I'll take the waterboarding.
I know, right?
Not Ross. Not only is it a torturous crossing, you've had to prepare for this, right? You can't just go out willy-nilly and be like, oh, I'll make 80 miles on my stand-up paddle. The torture is the prep that you're having to do.
Yeah, actually the hardest part, the easiest part about this whole thing, is going to be the 80-mile paddle. The hardest part, was really trying to find a board, and then trying to find a boat captain, to guide you across, so those things were tough to find because it's, tough to get somebody to commit to going over to the Bahamas and then slow 15-hour, slow roll back, so it's tough to find somebody willing to do that for you.
Can they fish while it's happening?
Yeah,
They gotta be
as long
watching
as you're not trying to back down a marlin, and run me over. But yeah, I mean, throw a line out there. But first and foremost, you got to get me, to that beach as quickly as possible. So.
Sounds like the easy.
Look out, Ross.
Yeah.
Sounds like the easy part was signing up for the thing, and then it's been downhill ever since.
Yeah. But it's paddling's been fun. Some grueling ones, but it's for a good cause and it's a good adventure. So to say you did it.
Yeah, I'm joking. It is a great event, and it's it does take commitment to be able to want to participate in that. So thank you for doing that too, Ross.
Yeah, thank you, Ross. Anybody that wants to contribute, even if it's just $5 or something, just go over to the Florida Talk Real Estate page and click on it. It's the link I put on there. I know I haven't looked at it in a little while, but the link itself is coming directly from the cystic fibrosis group, right?
Yeah, I mean the link on I believe the link that you have pinned is my fundraising page.
Mm-hmm.
But there is information about Piper's Angels and links to there and the whole event, and you can find out a bunch of information about it. They are looking for volunteers for the beach landing, to help out for everybody that makes it ashore. So if you want to go out and have fun in Lake Worth and hang out and be a part of an event, go to the Crossing for Cystic Fibrosis website and sign up to be a volunteer. I think you get a cool shirt too, so why not?
Yeah, that sounds awesome.
And you guys come into Lake Worth Beach, like where the pier is?
Yep, right there. That's the finish line.
Which side of the pier?
That I don't know.
Oh, that's a north side or south side,
Only Mike would ask that question.
Well, I'm
What
trying
difference
to
does it
envision
make?
it.
I'm hoping it's the south side. That way it'll be just a tiny bit shorter.
There you go. Hey, I just want to continue. We're going to talk about insurance, homeowners insurance, in just a few seconds, but I want to talk about what we were talking about with the record-breaking 601 median sales price for single-family homes in Palm Beach County. I pulled up an article to find out the top, I don't know if it's 10. Yeah, the top 10 median price single-family home markets in the country, right? So what do you think? What city do you think is number one for the highest median home price?
San Francisco.
San Francisco, what do you think?
I said LA.
LA? AJ?
I wonder if it could be
New York.
New York City.
No. It is two of you guys are in the right state. Believe it or not, it's San Jose. San Jose, the median sales price right now is $1.39 million. Right? That's the only one that's over $1 million. Number two, Los Angeles, 998, almost $1 million, right? San Francisco, number three, 978 or 601. Okay. San Diego, 921. Stanford, let's see. Stanford, the first one out of the California area, 900,000. Seattle, 782. Boston, 746. Honolulu, 721. New York City, 692. Those slackers. In fact, they're the number 10th out of 10, right? 692. So 692 is the 10th most expensive market in the country. So we're, $100,000 below that. So even though that our prices are high, they're not the highest in the country. I just wanted to throw that out there.
So that's why anybody coming from any of those cities, they're like, look what you get for your money in Florida. Let's go to Florida. Maybe that's part of what's happening.
The other thing I want to do is make fun of Zillow, because anytime I can make fun of Zillow, I always try to make fun of Zillow. Sorry about that, people that are Zillow fans. You shouldn't be. Okay, so here's the deal with Zillow. They try to get into the iBuying program that so many other companies did. And to disclose, Keller Williams has their own iBuyer program. I don't like it, but they have it. And And Zillow, like Redfin and a couple of those other companies, they said, hey, instead of just advertising the properties, why don't we just be the people that buy and sell the properties? So they went out and they thought they were going to be Mr. or Mrs. Investor, right? Zillow, Mr. Zillow, whoever Mr. Zillow is, right? And they lost hundreds of millions of dollars in the process. They only were in it for 3 years and they lost hundreds of millions of dollars. And then I found it to be fascinating that when they had to dump all their properties that they bought, right, they decided that they didn't want to be in the real estate business anymore. So they just decided they had to liquidate all the overpriced homes that they bought. And they bought them overpriced because they probably used as estimates in order to decide what to buy the houses for. And then I thought, stupid Jim, I thought they would just put them on the market with all the realtors that they had hired to sell the properties. I thought they would just sell the properties themselves, but they didn't. They turned to institutional investment companies to buy them in bulk so that they would have the responsibility of selling the properties. And the reason why I'm bringing this up, and Ross, I don't know if you're going to let me throw you under the bus right now. It's not really throwing you under the bus. Can we talk about your case, though? Because I find it to be fascinating.
My what?
Your house. I find your house to be fascinating, your example.
Oh, that condo that I got?
Yeah, the condo.
Oh, okay.
So what happened is Ross bought the condo about how long ago, Ross?
In August.
He bought the house in August, and the original and who he bought it from was Zillow, right? You bought it from Zillow. Is that correct?
Yeah, I bought it from Zillow. Yeah.
Yeah, you bought it from Zillow, and
Did
he
you
paid
meet Zillow at the closing table?
Yeah, did you meet Mr. Zillow? Because I'd like to meet that guy.
No, his was a mail away.
Oh, okay, there you go. So here it is. So he buys a house from Zillow. Now, when he bought the house, he paid less than what Zillow bought it for. Right?
About $10,000 less than what Zillow paid for.
$10,000 less than Zillow paid for it, right? So Ross's house is one of the houses they were trying to, quote, liquidate because they didn't want to get in the real estate market anymore, right? Now it's he bought it in August. Now he went and we did some quick comps on his property, and the house appears to be worth about $100,000 more than what he paid for it if you put it on the market right now. Is that about right, Ross? I mean, rough numbers. I'm not going to tell you what you paid and all that,
close to that,
but just about $100,000 more.
Is that simply because the market increased, or you did some stuff to it, Ross?
No, I mean, I think it's just because I bought it for less, and then I haven't done anything to it, and just the market has been going up, and there's no inventory in that neighborhood, and yeah.
And I was going to say, let's just stop for a minute and appreciate how bad you have to be at doing this to lose money on homes during the highest period
and the
of
best market in the history of the United States for real estate.
Stunning.
I know, right?
It's
How bad?
Stunning.
How bad? I know. Isn't it amazing?
It seems like they simply pulled the plug too early on the program because they did have the properties and the properties were increasing. Why did they sell it when they sold it? That's
they could have just held them and let them sit empty for 2 months and they would have been fine.
It's ridiculous what we're seeing. It's mind-boggling how bad they were. You know what? If Zillow just went out and said, you know what, we made a colossal mistake. Let's bring in some realtors, like regular realtors, to come in and sell these properties for us, and we're going to pay the regular real estate commission. They would have made a killing compared to what they did selling to the institutional investors.
But what's weird though is, a couple months ago when we were talking about when, it was big news about Zillow, doing their thing. If you looked at what Zillow owned in Palm Beach County and what it was listed for on the MLS, they were listing for less than what they paid for it. Almost all of them were that.
They wanted bidding wars.
My appraiser friends, we kept calling each other. We kept running into these comps that just made no sense. And the Zillow comps, they were just contrary to common sense most of the time.
Yeah,
I guess much like a price. I was going to say, much like an increased value comp, you kind of have to use it, AJ. Well, these lower comps, you kind of have to use those as well, right? Because they're there.
Well,
those sales.
You've got to look at is the seller, is it an arm's length transaction? And there's a few things that make that up. Part of it is, are they typically motivated, and are they knowledgeable? And we threw out a lot of Zillow comps because they didn't make sense. They were contrary to all other market indicators.
I guess if you go back, so hindsight, 2020, but Zillow must have had their bean counters thinking, hey, 2022 is going to be a crazy year for interest rates, right? Interest rates are going to go up. They might be thinking like the rest of us. If anything, has to cause inventory to increase, has to cause prices to flatten, perhaps even go down. And so they must have said, we don't want to be in that market, right? We're going to sell everything, liquidate. We're done, right? We overextended ourselves. But who would have predicted, Jim, that you're getting the highest median sales price in Palm Beach County in April of 2022 while rates went up, 3% over in the first quarter? Like, who would have predicted housing price increases and rate increases that basically double?
Well, that's why we were talking about, several months ago that this market might defy gravity, might defy science, which means what goes up must go up. So the interest rates were going to go up, and there were some people that believed that the prices were going to continue to go up anyway. And the thing is with Zillow, I'm laughing about what AJ just said. So realtors have always had to deal with the dreaded Zestimate, which is the estimate that Zillow says your house is worth, which they have no idea what your house is worth. They're using these algorithms. They're using very not accurate information. They're pulling from various different sites, including the Property Appraiser, which Property Appraiser is great and everything. I can't really complain about any of the property appraisers in the area as far as the information they give out, but it isn't accurate. It's only as accurate as the information that they have in their file. They don't know what's been updated or what hasn't. And so we've always had to deal with the dreaded Zestimate as realtors. Now the appraisers have to deal with the dreaded Zillow comps. Now we got the Z comps, right? We got the Zestimates and the Z comps.
But from what I've read from their statements, I don't think it was that they were predicting so much as, look, the Zillow estimate, if you're in Abacoa in a 10-year-old townhome and it's cookie cutter and there's 50 other ones, then Zillow probably is fairly accurate. But if you're in a 1970s house in a non-HOA neighborhood where some of them have been renovated and some of them haven't, it's just not accurate, and they treated it like it was. And from what I've seen, they came out and admitted that and said, this is where we failed, was we used this estimate beyond what it was created to do.
Yeah. And we've been complaining about Zestimate since 2012 on the show. We've been making fun of Zillow since 2012. And the thing is that at first Zillow was very defensive and very aggressive and justifying that their estimates are way more accurate than realtors are giving them credit for. And then after years progressed, a couple people actually sued them, saying that you're damaging the value of my property by telling people what you think it's worth. I don't know if those lawsuits won or not. I don't know. But what I could tell you is that then they changed it to say, well, the Zestimates are basically just a talking point. That's how they describe it. When you click on About Zestimates, go ahead, go to Zillow, click on the About Estimates, watch your eyes pop open about what the statistical relevance is about those estimates. And they start off, this should just be used as a starting point to talk about what your house is worth.
That language is probably a result of lawsuits, Jim.
Yeah.
They probably had to do something like that. So maybe they still believe in it. The proof is in the pudding, right? They used their estimates to purchase homes, and then sold them for less.
And can you imagine now homeowners for a couple of years now, it's only been a tiny fraction of the market, like 1% or 2% of the market, but they're actually going to these companies to sell their house. Right? Think about that. Some of these people are hiring the companies to sell their house. And to me, that's just amazing. It's like, why would you go to a company that's failing on buying and selling houses for themselves? And then
I never understood how Zillow
them to give you top dollar for your house. I'm like, are you kidding me?
Yeah. I never got how they, their bread and butter was money from real estate agents, right? Like that's how they made money. Real estate agents investing and getting in their search results, right? And getting leads from that. And then they turn around and want to cut out the real estate agent. I don't get how they like bit the hand that fed them, essentially. How many agents stop using Zillow because they're like, that's my competition now?
But it's been clear since the beginning that that's where it was going, though.
Mm-hmm.
Like I never understood that either.
Mm-hmm.
Yeah.
Well, Ross, I'm sorry. We're going to do it at 10 o'clock, the insurance. Okay. And the other thing is, so I'm going to switch to Susan right now because it's just a quick question and we've only got about 5 minutes for the next break. And then we're going to go to homeowners insurance. I'm sorry, guys, if I felt like I was leading you on. If I was a really good professional host, I would have led you on purpose, but I didn't. This is accident. Okay. Susan and Mike, you got the loan for Susan on her home, right? Natalie helped her buy the house. Natalie Medina Rao on our team. And she just wrote, "Holy cow, I just looked up my house. And it's worth over 80,000 of what I paid. And that doesn't include what I've put into it since I moved in. So can I get rid of my PMI now?" PMI is private mortgage insurance. So explain what PMI is real quick, Mike, and then just talk to her about what would be the process about dumping the PMI that quickly after she bought the house.
Yeah. Well, hi, Susan. So yeah, PMI is private mortgage insurance. So basically, anytime you're putting less than 20% down on a conventional loan, you're going to have mortgage insurance, which is an insurance that you, the consumer, pay for, but it doesn't really protect you. It protects the lender against default, essentially. So if they had to foreclose, there's potential losses, and they have an insurance policy to recoup some of those potential losses. So yeah, usually once you attain that 20% equity position, right? You could do that when you start by putting a 20% down payment, or if you put less than that when you bought the home, you can achieve that equity position over time by the home increasing in value. Also, you're paying down your loan through the years. So in general, yeah, once you have that 20% equity position, you should be able to call your loan servicer and say, "Hey, I got enough value now. I want to cancel that mortgage insurance," and that can make your payment go down, right? Because that's generally part of your monthly payment. I forget if Susan did an FHA loan when we started. If she did, then you would not be able to cancel that mortgage insurance. FHA mortgage insurance is for the life of the loan. But if it was a conventional loan and you think you have sufficient equity, you can make that call. I'm pretty sure, Jim, don't quote me on this, but I'm pretty sure you have to have MI for at least 2 years. So I think Susan bought last year, so she's probably just coming up on like a 1-year anniversary. So it's nice the home's increased in value. I don't think she can cancel it quite yet. You have to wait 2 years, but you can call the servicer and find out.
Okay. So that's a really good tip. And you could just cancel it, right? You don't have to do a refi or anything, because if you had to do the refi, the interest rates are so high compared to what Susan paid, even just earlier, within the last 12 months. It might not be worth to do the PMI, right? To dump the PMI.
I mean, if the only motivation for the refinance is to get rid of the mortgage insurance, it's not going to make sense, right? Because you're going to get a higher interest rate. So the combined 30-year fixed rate plus her current MI is going to be less than the current interest rate. So
yeah,
it's a Freddie Mac. Yeah,
it's a Freddie Mac file.
So it's conventional. Susan, if you call the servicer, but I want to say that you have to have mortgage insurance in place for at least 2 years. So come this, next summer, assuming the value is still there, you should be able to call and cancel. If you have, and they might want an appraisal.
I was just going to say, Mike, now in the old days when I started in this industry, we were doing a lot of those back in 2005. We'd come out, we'd get a call from the homeowner, we'd go out there, write an appraisal, and they would just send that to the lender. But it doesn't work that way anymore, I'm assuming.
No, it depends on the individual loan servicer. But yeah, I would say most of them want some sort of confirmation of the value. That could be a full, a site inspection appraisal. It might be, what do you guys call it? A
desktop or a computer generated value if it's enough spread.
Or maybe a drive-by where you just like confirming the exterior stuff and not so much on the inside. Whoa.
I don't know what happened there. Sorry.
So each servicer is going to have their own procedure for assessing whether or not you actually have that equity position. Like you'll naturally get to the equity position over X number of years simply by paying down your mortgage, right? But it's only when your home has increased in value that you can get that at least an early look at canceling mortgage insurance. So yeah, they'll assess the value one way or the other. Depends on the servicer though.
Hey, we're not going to take the break because I want to make sure we get into everything. We have such important stuff to talk about, but we do have a caller that's kind of interesting. Her name is Maureen, and she has a question. She's from New York, and she's thinking about buying a second property down here in Florida. And and she had a couple good mortgage questions. So, Jimothy, can you put Maureen on the air?
Absolutely. Maureen, you're on with Jim and the rest of the gang with Florida Talk Real Estate.
Hey, how are you guys? This is a great show. I just found it this morning. I'm thrilled to connect with you guys.
Well, thank you so much. I hope you subscribe and like the page so that you get notified every time we go. We're live every Saturday from 9 to 11, and then they turn into podcasts. So if you go to our Facebook page or our YouTube page, or
I've already been listening.
Yeah, cool. Well, so you're thinking about buying a second home down here, right? Is that correct?
Yes.
Okay. And I
guess my question is, I'm go ahead. I'll let you guys.
Go ahead. What's your question, Maureen? I'm sorry. There's a little delay. I apologize.
No, that's fine. I get that there's usually a 5-second delay or something like this. So what I posted on your Facebook page was that I've got about $350,000 in cash for a cash sale, because I'm understanding that if I take a second home in Florida, because I'm going to maintain my residency in New York, I won't get into that. I just have a beautiful condo on a Finger Lake, and I'm deemed a condo, so my total taxes are super cheap. I'm keeping the place. Mm-hmm. The thing is, in Florida, I'm understanding that the possibility of Ocala, but there's other places to invest. And this would be a second home. And I'm understanding too that regarding Freddie Mac and Fannie Mae, because this is a second home for me and not a prime residence, there might be a $13,500 fee. I'm just wondering if you guys know anything about that, and wondering if Ocala might be a place that I want to consider looking at for an investment.
Great, Maureen. Thank you. So Mike, let's start with the mortgage stuff first.
Yep.
Yeah.
So I hear, so when you're applying for a loan, say it's a conventional loan, Freddie Mac, Fannie Mae, there's three kind of ownership check boxes, right? When you're one of the three options, you're either a primary residence, a second home / vacation home, or an investment property. And so I'm hearing the word second home and also invest. So the distinction there, and you mentioned that, a $13,000 fee or something, that's not going to become a fee, is not coming from Fannie or Freddie. But what they do have is what they call loan level pricing adjustments, which are little adjustments for risk based on the type of loan that you're doing, based on your credit score and loan to value. So basically the down payment amount. And also a primary home is going to have a different rate than a second home / vacation home is going to have a different rate than an investment property. So that's why that checkbox is important. What are you actually buying? Because it impacts your interest rate. So it's going to be either a higher rate, right, on a second home or investment property, or you can pay points, which I think is what that 13,000 you're talking about. You can pay points to get the same rate as if you were buying a primary, right? So maybe that's what that fee is.
Okay.
If you don't pay points to reduce the interest rate, then you're simply going to have a higher rate than you would as a primary home.
So my question is the interest rate for investment versus a secondary home, a second home, like a vacation home, is the interest rate higher for investment?
It's definitely higher for investment. And it used to be when you bought a second home, you actually didn't get a rate tick. It was treated rate-wise the same as a primary, but they made an adjustment to that last year. So there's still going to be a gap between. So now instead of having primary / second home rate versus investment rate, now you have primary rate versus second home rate versus investment rate. Those are all.
My other question is, Maureen, you're going to want to know this, is Ross, for insurance purposes, if something was a vacation or second home versus an investment home, would the insurance policy be different?
I mean, it is.
Oh, that's a good question. I don't know.
It is different. If it's going to be a tenant occupied, there's a certain policy that you write for that. And then if it's going to be owner occupied, whether it's primary or secondary, that's a different policy as well.
What happens if it's a short-term rental, like an Airbnb type of investment, and not just a tenant situation?
So if it's short-term, we can still get insurance. It's typically, along the lines of, regularly tenant occupied, but those are a little bit tougher to do right now just with the state of the market, but we can still find them.
Okay. Well, Maureen, now do you have any questions up to that point? Because then I'll talk about the geography.
I think what I was considering is more the 350,000 cash sale in that ballpark. But now you guys have intrigued my interest as far as a possibility of that being, a portion of the mortgage. But yes, no, those were great answers, and I'm going to re-listen to this podcast. I want to listen. This is a great show. Thank you. I'd love to hear about the location. Thank you.
Yes. So, I know Ocala very well. I went to University of Florida. Some people are going to hate it, Ross, because I'm a Gator, right? So I don't talk about it much. But I went to University of Florida, which is very close to Ocala. Ocala is really known as a very big equestrian community. So there's tons of ranches out there. I don't want to say it's rural anymore because it's getting to be a little more cityfied, if you will. But I'm telling you, that's an up and coming area, though. When you say so, AJ, I think Ocala is getting hot.
I have no idea whatsoever.
Oh, okay. Well, I kind of follow like the whole state because of the show, and Ocala is a hot area. One of our friends had just sold their brokerage down here, real estate brokerage, and moved to Ocala because they feel like that's going to be like a really up and coming area. And I can understand why. It's in the central part of the state, so it's less vulnerable to hurricanes. It isn't as overly developed as it is, like you said, in Naples. I love Naples. Naples is awesome, but it is very expensive. Like, it's a much higher price point, but everything's expensive out there. The dining, the shopping, all of that. The downsides of Ocala, you really don't have that metropolitan or cosmopolitan type of experience if you're looking for that. If you want that, you're going to be driving to like Orlando or something like that. You're going to be driving places to have that kind of experience if you're looking for that.
My first question, I'm thinking so I hear Naples, I'm thinking Gulf Coast environment, right? Like the beach, but on the Gulf. Then you hear East Coast, South Florida, that's East Coast ocean, right? Ocala is Central Florida. So are you looking for the beach, Maureen, or are you not so interested in the beach?
I am interested right now in a place I can fly down to for a month, rent a month, play some golf, and come back. Eventually beach. But this is what I'm thinking is invest now before I'm priced out. In 5 years, then figure something out where I want to go back and forth.
Well, if you're a golfer,
do my business. Yeah.
I'll go ahead. Some people what?
I'll be able to do my business between Florida and Massachusetts and New York. That's the game plan.
Okay, awesome. Well, if you're a golfer, one of the areas that you might want to check out is Palm Coast. Palm Coast. Now that's on the northeastern part of Florida.
Also, the villages are in that area.
The villages are in the area. I know a little bit about the villages. Like I understand it's the largest, community in the state of Florida, developed community in the state of Florida, all that. I hear that Margaritaville or whatever Jimmy Buffett's thing is getting up there too now. But the villages is, I don't know how much price appreciation happens up there over time. And I think when market changes, they're more affected a little bit. What I was thinking is if you pick the area that it might be a good, instead of doing it as a tenant thing, doing more like an Airbnb short-term rental stuff. Okay. If you're doing that, right. I have a ton of our customers, but also friends. They're renting out places. Like, for example, somebody bought something in Indian River County. You might want to check out Vero Beach in Indian River County. And in Vero Beach, this guy bought a 4-bedroom, 2-bath pool home. It was pretty fixed up on the inside. He just had to do some landscaping and fix up the pool area. He furnished it. He bought the thing for like $270. He probably put $30 into it. And he opened up his books to me for the first 9 months that he had it on the market. And it was 80% occupied, 80%, which is pretty high. And he was making about 4 times you would get for the monthly rent in the same neighborhood. So there is opportunities there.
Yeah, this is really interesting to me because I do have a fractional ownership in Lake Placid that I rent out, and I have someone that manages that. And that's, he takes 25%. And I heard your comment, like you're only making $300 to $400. My insurance is taken care of. My HOA is taken care of. And I'm still busting $13,000 to $14,000 a year. So I'm keeping. But I thought if I can find something like that in Florida, if I could have somebody manage it, I'm in.
Well, actually, I have a service. We should talk off the air because I have a service where there's a company that runs Airbnbs, and what they do is they partner with people. So what happens is you tell them the budget, they go out and find an Airbnb that's going to work, right? Because they do this professionally, and then they join forces with you where you're both on title, so you're on title with them. So they can't do anything without you. You can't do anything without them, and they manage the property. That way you get to participate in the equity and everything else involved in it. So Maureen, I'd love to talk to you off the air. So if you feel like that and you haven't given your number to Jimothy, all you have to do is call 888-973-7828. Anybody else listening that wants to call, and I promise we'll call you off air. It's a 24-hour live phone service. And then as soon as you leave your information, we'll call you back.
Yeah, I gave my my personal cell to the person, so there's.
Great. Would you mind if I reached out to you Monday? Can I reach out to you on Monday?
Go ahead. Feel free to reach out. Yeah.
Okay. Thank you.
Monday, Tuesdays, and Wednesdays, I work about a 14-hour day. If you could call Thursday afternoon or Friday, that'd be awesome.
I'll do that, and I'll text you in the meantime so you can find out a little bit more about us. And thanks for finding out about us. I hope you like the page.
No, I think it's going to be great. Can I give the person off here my email so he can send me information on the page and everything else, Jim?
Please, Jimothy, if you could take that information, that would be great.
Absolutely. No problem.
Thank you. Okay. Hey, okay, we're going to switch gears. Thank you, guys. We're going to switch gears about more mortgage insurance, homeowners insurance. Okay, we really need to talk about this because it's big stuff going on. Okay, so first of all, Ross and I, when we first talked, we have. Let's start off this way. I don't want to talk about the big picture. So we had a guy that listens to the show, James. Thank you, James, for this story. Big fan of the show. We helped him with the real estate transaction back in the day, and then he had a buddy that got in trouble. He had a probate house. Basically, it's a estate house, and I guess the person that lived there got some type of refi or a mortgage on the house. And then when that happened, the insurance payment was included in the payment of the mortgage. And the next thing is the insurance company comes out and does a survey of the property and have given notice to the family that there are several deficiencies to the property and they're no longer going to insure the property unless these things are taken care of. Most of the stuff is pretty minor, but it also includes the roof. And while the roof is a metal roof, it was put shingle over shingle. It was put over the shingle roof. So they didn't rip off the old roof. They just put the new roof on the old roof. I hear that reduces the useful life of a roof by 1/3. I've heard that happen. I've heard people use that figure, that when you do that, you're saving money by not ripping off the roof, which is ridiculous because you're losing 1/3 of the useful life of the roof. By doing it that way. But anyway, he was noticed. He was afraid that the insurance company, because the insurance company was going to dump him, that either he was going to get what's called forced place insurance, which is the mortgage company getting insurance for the homeowner, or that the insurance company would dump the mortgage and say you breached the mortgage by not being insured, so therefore we're going to accelerate the mortgage and foreclose on you because you don't have insurance. So there was a lot of moving parts on that. And the interesting part was it was a company called FedNat, which is the insurance company that is making all these demands to the homeowner. And Fed National, but it's FedNat.
Federated National.
But yeah, they just came out with a report saying that they think they're going to go under and that they're going bankrupt, and they're trying to downsize as much as they can right now because they're about to go bankrupt, which several other homeowners insurance companies in the state have done. So FedNat now is in trouble. And then there was another company, Ross. What was the name of that last company? Hold on, I got it right. Sorry, what was it? Arden. Yeah, Arden. Oh, no.
It's either Lighthouse or Avatar.
Yeah, you're
Those are
right.
the
I'm
last
sorry.
two ones that went out of business.
Yeah, just bear with me here. I'm reading the article.
I think the better question is who's left?
That's a good point, Mike.
That's
it. How many companies other than Citizens are writing?
Maybe, we actually just had one of my kind of preferred carriers that I like to write with. I like them as a company. They actually just opened back up to homes that are 40 years, less than 40 years old. But they do have some roof restrictions. But if you've got a newish roof, now we have another outlet if the house is less than 40 years old. So that's been a little promising to see, a carrier actually, open back up as opposed to what we're normally seeing with all the carriers tightening up and, shutting down.
And isn't some of the talk, I know the boys and girls up in Tallahassee are trying to put some sort of Band-Aid right on this dam that's breaking, but were they talking about like forcing insurers to not have age exceptions on the roof? Like if the roof is less than this many, you can't deny it because of that? Is that?
I mean, I haven't heard that. What I've seen mostly is what they want to do is try and do like an actual cash value, like depreciation schedule once your roof gets over a certain age. There's a few carriers that do offer that, but I haven't seen the savings or, I haven't seen it really make sense where somebody would say, oh, I'll go that route as opposed to having full replacement cost yet. So we'll see what happens though.
Yeah, I was thinking to myself, even if they did do that, like say, hey, Mr. or Mrs. Insurance Company, you can't deny somebody just because their roof is 15 to 20 years old.
Yeah, but I mean, these are private companies.
They can set the rates, right? They could set a rate so they price out somebody in that realm, right? So yeah, we'll give you the policy, but it's going to cost you, quadruple if you had a new roof.
Yeah, but I mean, then you're right. You're still in the same boat.
Yeah.
Because
that's what I was thinking.
You've got Citizens that's now, instead of being $1,000 cheaper, now they're going to be $2,000 cheaper.
Yeah.
But you've got more carriers offering coverage, but they're just still charging a much higher price than what Citizens is offering right now. So you're still just going to Citizens until Citizens kind of, they're having their rate increases, but they're capped at what they can increase, per year. So until Citizens kind of catches up with market, or, it's.
Do they do that? Is there a time where Citizens is readjusting? Is it like January? Or are they on some sort of?
So they're capped at. I mean, the cap is going up every year. It's like 10% a year, 12% a year.
That happens in January.
It's just whenever they rate or file their rates.
Okay.
I don't know what their exact date is.
Jim,
I think we interrupted. You were doing a case.
No, that's okay. That's okay. So, so this guy, he didn't know what was going to happen with the property. He had what, according to the insurance company, he had a bad roof, right? He had some minor plumbing issues inside the house, some valves that they felt needed to be replaced underneath sinks and stuff, nothing serious. And then they had some missing drywall by an electrical panel, which all they had to do is put the drywall back and everything would be fine there. No big deal. And the last thing is that there were a bunch of plant pots with plants in them in the backyard. It's like a big 5-acre lot. And they had a bunch of plants in the backyard that are potted, but they're not like sunk into the ground. So
can you imagine getting that report from your insurance inspector? They're like, yeah, you need to fix this little drywall next to the thing. Yeah, you need to replace the valve underneath your kitchen sink. Oh yeah, you need to get those plants potted. Oh, by the way, your whole roof needs to be redone as well.
Yeah. And the thing is the family wants to sell the house anyway. So the idea of spending the money to put the roof on, they're not intending to keep the house. So the whole roof thing is, this whole insurance thing is a very big inconvenience to them, because what they really want to do is sell the house, but now they have to deal with this. So the person that I talked to, there was a bunch of relatives involved, but the person I spent the most time with was very freaked out about what was happening. They were afraid that they were going to have the foreclosure happen very fast. They didn't know what was going to happen with the insurance. They just didn't know what the heck was going on. So I jumped right away and got over with Ross's team over at Brightway Insurance, Juno Beach, and we started working. We've been working on that together, and Rodolfo's been great. Ross, of course, Rodolfo's, I know, is your right-hand guy over there, and he's just awesome. So we went through a bunch of stuff, and we started going through it. And let me tell you, they're so detail-oriented, because they noticed like the potted plants in the backyard, because I forgot to tell them about that. And Rodolfo picked up on that right away and called me and asked me about it. But what we found out after talking, that there was an insurance policy that he might not have to, that the family might not have to replace the roof, still satisfy the mortgage company to give them the transition time needed to put the house on the market and sell it. So that was because nobody's living there right now, they could do what's called vacant insurance. So could you explain vacant insurance just a little bit, Ross?
I mean, it's just an insurance policy that's written on, a home that's unoccupied. Regular carriers or regular insurance policies, they don't, they want you to move in within 30 days, and then if, they don't like vacant homes because that's where things can go wrong when nobody's there. So this is a policy that's specifically written for a vacant home. The rates are higher. There's no wind mitigation report that gives you discounts or anything like that. It's just kind of rated based on the age and location and construction of the house. And like I said, the rates are going to be higher, but you at least can get a policy and
you don't have to put the roof on.
Right. Yeah.
You're not going to be demanded to put the roof on. So you're paying a little bit more in the policy, right? But then you don't have to deal with the headache of the roof. Now, when you sell the house, obviously the roof's going to have to be dealt with in some way. And you could do, but there's other ways to deal with it than just saying, hey, let's just put the roof on it. So that'll give them the negotiation skills. But if they get this vacant policy, it gives them the power to do what they want to do on the back end. And hopefully they'll hire an agent like me to help them, because once we got them to the insurance point and they realize they don't have to do anything right away, they're putting everything on hold for a little bit. So,
I mean, that takes the pressure off, right? So get a policy that fills the gap and let them, not be pressured of losing their home to foreclosure because they can't get, insurance.
And the other
I don't think that would even, I don't know. Mortgage companies can be very dirty, I guess. And, but typically they do, the mortgage company, like I said, they don't want to foreclose. So they just typically will go get that forced place insurance and just add it to it. And, it's probably going to be expensive too, so.
I would think that's the normal course of events, but maybe it was different because it was an estate, right? An inherited property might have changed what the mortgage servicer, like Jim said, they have the option of calling it due. If you don't keep your home properly insured, part of the one of the terms that you're signing on when you sign that mortgage and that note is that you will maintain property insurance, right? Specific standard of property insurance. And so if you don't keep up that end of the bargain, yeah, you're right. Traditionally, lenders don't want to foreclose, but they also don't want the home not to be insured. But I don't know if it changes when there's a change of ownership like that.
Yeah.
And the other thing that could happen is, and when you're dealing with mortgage brokers, or mortgage companies, and sorry about this, Mike, but when you're dealing with them, when you get in trouble like this, it's kind of like, I always joke, it's kind of like being in the water, and you're wading in water, like in the beach, and a shark swim by, and you don't know if it's just going to swim by and leave you alone or take a chunk out of your leg on the way, right? You just don't know. You never know what's going to happen because they're sharks, right?
Yeah.
So with the thing that I was trying to make sure has happened is a couple of things. You don't want the forced place insurance, because this is the way I know everybody agrees about this, but if the mortgage company gets the insurance policy, they're not really going to care about budget. And it's usually 2 to 6 times the amount, what they charge. And the reason why it could be so high you're paying more for the insurance policy, but then a lot of times the mortgage company is hiring a company to do the insurance. They don't go out and get the insurance themselves. They hire a subsidiary, that subcontractor that just goes out to deal with the insurance for them. And then they charge a fee. And then all that's passed on to the consumer. So when the consumer gets the bill, it's outrageous. The other thing
I was going to say that the forced place insurance also is insuring the lender, right, Ross? It's not insuring the homeowner.
I think they pretty much just take it out for whatever the loan amount is, So if your house, if to rebuild your house is 500,000, but you only owe 250, they're only going to take out the 250.
Right.
They just want to make sure they get their money
back.
back.
They get their money back. Now, the other thing that could happen, though, is that they did accelerate the mortgage and file a list pendants to go to foreclosure. Then all these other costs start clicking in.
Oh, yeah.
Because as soon as the mortgage company tells the foreclosure attorneys, hey, file a case against this house, boom, thousands of dollars are spent right there. Because the attorney got to open up the file, write up all the paperwork, serve the people, right? Do all the serving and processing. They got to file the claim in the courthouse, which there's court fees and stuff. And the next thing you know, there's thousands and thousands of dollars being spent, and the clock is continually clicking until you get the problem resolved. So it's much better to just jump in there and get the answers right away. So if you're having problems with the insurance, you can give us a call. We Ross will help you every way he can. We just had a good success story with Pat, who just called in or wrote in earlier today on Facebook saying that he was really happy with Ross's services when he looked like he was being dumped from his insurance company, and Ross is going to write a quote for him. So look, the insurance company, the insurance stuff is a really big deal right now. One of the things we do on our listings right now is we put up an insurance quote from Brightway Insurance so that people are comfortable about what's happening about whether or not somebody could get insurance on a house. For example, Ross, we have this one house and the house roof is 2005, I think. A lot of people are complaining about it, but we did a wind mitigation report that showed it had 5 years left on the roof, right? Which is enough to get insurance, right?
Mm-hmm. Yeah, the 4 points where it shows the useful life left.
Right, the 4 point. I'm sorry, I said Windman. I meant to say 4 points. So what happened was people are calling me up and automatically make a decision that they want to drop the price on what they want to offer because they're concerned about the roof and the insurance because of the age of the roof. So one of the things we do is listen and say, you don't have to worry about that. We have a bindable insurance quote from Brightway Insurance on our website on the listing page, and you can read it and ask any questions you want.
That's a great idea. I know that holds a lot of people back. I'm sorry, I just wanted to ask real quick, Ross, all this talk about the roofs, aren't flat roofs a bigger deal? And I don't mean maybe the whole roof is flat, but how does it impact when somebody's got a flat roof section in the back, maybe from an addition or something? Are the rules different for the flat roofs versus the regular pitched?
I mean, the most that most carriers will give on a flat roof is 10 years. It's usually around 5 for that flat. If it's not over living area, sometimes you can get a little bit more leeway from that. But the insurance companies still want to see, or at least Citizens still wants to see at least 3 years of life left on it, no matter the age.
So if it's flat and it's above living area and it's a 12-year-old roof, you're going to have to reprove it every year with remaining useful life, or do they?
So if we write the policy with Citizens today, let's say we write it today, and there's 3 years of useful life left, they will get the insured will get a non-renewal for next year because now the roof only has 2 years of useful life left. With that being said, you can go get a roof certification, and if that roof certification says there's at least 3 years of life left, you can submit that back to Citizens to prove that there's at least 3 years of useful life. So that's kind of the magic number in today's environment, just because most of the policies that we're writing are with Citizens. So
right,
that 3 years of useful life, that's kind of the number that we want to see on those 4 points.
So if somebody gets a roof certification and it says there's 6 years of life, are they going to leave you alone for 3 years?
They will. Yep.
Okay.
Yep. But if the policy, the next time it renews, theoretically would have 3 years or less than 3 years based on the original 4-point, then they'll get a non-renewal.
Okay. Thank you. I know that's been something that's been a concern for a lot of people these days.
Yeah.
It has.
It's a concern for the main roof too, because we get a lot of, we're getting a lot of citizens non-renewals for the, the life of the roof. So we're having to have them go out and get roof certifications, and, hopefully they're coming back with at least 3 years of life left, or we got to break the bad news that says, hey, it's time to replace it.
You're saying roof certification, Rob? Is that just a standard 4-point? You just have somebody go out and do a new 4-point, or is it a specific?
So it's pretty much, the 4-point inspection looks at the electrical, the AC system, the plumbing system, and the roof system. And so the roof certification is pretty much just the roof part of the 4-point.
Okay. It's the same like inspectors?
Yeah, the same guys who do wind mits, the same guys who do 4-points,
okay.
Same guys who do home inspections.
Price, from your experience, what's the difference in price between a 4-point and a roof certification?
Well, before the rising gas prices, a 4-point was like $100, and then a roof cert was like $75.
Mm-hmm.
So
okay,
I know all the inspectors have increased their rates. I can only keep up with what the insurance rates are. I can't keep up with what inspectors are charging. But I know they've increased their rates too.
Yeah. Well, look, insurance is going to be a big deal. They're still talking about calling a special. Oh, they did call a special session. Wait, governor has called for a special. Yeah, it begins Monday. I'm sorry, I didn't know it began Monday. So here's the thing, though. A lot of the insurance people are saying that special session isn't going to really help much. I don't know how they're deciding that when they haven't done anything yet, but
because they got to curb litigation.
Mm-hmm.
It's all about litigation. So, I think we've said it, in the $15 billion that was spent on claims that resulted in litigation,
mm-hmm.
only 8% actually went to pay insurance claims.
Wow.
So it's all, it's all about the attorneys, and, they're the ones who are making all the money right now.
Yeah. I got to tell you, though, in my experience, when I filed the claim against my insurance company, the attorneys didn't make anything off of it. Well, maybe the insurance attorneys did, because I don't know what they charged the insurance company, but the person that represented us got paid squat.
Right. But so if the judge would have awarded you $1 more
right.
than what the insurance company offered you, then
right.
the insurance company has to pay all your legal fees.
Right.
And so
I heard about that.
If that happens,
has to be $1.
Yeah, it's $1 more than the insurance company has to pay your attorney's fees.
Look,
so that's why they're calling it litigation for profit.
Yep, this is a very chronic thing that we're dealing with. If you're trying to buy a house right now or sell a house, and your real estate agent isn't talking to you about this stuff before you get in the car or put the sign in your yard, I don't know what to say. What I would say is get a second opinion, or start asking questions. At least start asking questions. Hey, I heard this crazy guy on the radio show and he's saying this. What do you think about that? And then hear what your agent has to say about that. Okay.
What if let me ask Ross this question. What if, like, Jim takes the step of getting a quote for the home, and this is a real number. You guys can, if you need insurance, here's one avenue for that. What about the listing agents who will say, well, our current policy is this much per year with the current owners? How relevant is that as a data point?
I mean, it's not relevant at all, because whatever that carrier, they could have a carrier that hasn't written a piece of new business in 3 years. And so that carrier, you can't even get coverage from them. So
yeah,
whatever nice the current owner is paying does not matter. You want to find out what it is to get a new policy on that house today.
That's a really good point, Mike, because I hear that all the time from sellers going, but we have insurance. We have insurance. Mm-hmm. It's fine.
Yep. That's just one of the myths floating out there right now. It's just one of the myths. Don't get caught by one of these myths. Get the real answers from real people that do this all the time. Look what we got on the show right now. We got AJ the appraiser. We got Mike the mortgage guy. We got Ross the insurance guy. We got me as the realtor. You got people here that can give you real life answers. Look what Maureen was asking. Maureen had all these questions about where she should move in Florida. What happens if she finances or not finances? Then when we started talking about insurance, she's like, I didn't even think of that, right? Because we're going to be there and try to find out what's best for you in your situation. So this is Florida Talk Real Estate, the #1 information provider of all things real estate here in Florida. You got to check us out. We are going to take a break right now. Hopefully on the flip side, Scott's going to call with our open house today. We're going to talk a little bit more about appraisal stuff and how it affects mortgages, and we're going to get into that next.
I'd rather talk to Ross more. Insurance is insane right now.
Yeah, I mean, we didn't even touch on Federated National. They're early terminating 60,000 policies.
Yeah, I had a client that was one of them.
And I hear that most of it's in Palm Beach County. Did we take a break?
No.
You said we were going to.
Oh, I thought we were going to take a break. Timothy, can we take a break?
Sure thing.
Okay, thanks, man.
Here we go.
Got something to say?
I got something to say.
Text us at 47142. Start your message with Real Radio. Standard data and message rates apply, and don't text while driving.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
Hey there, everyone. It's going to be hot and humid today with high temperatures around 90 degrees. I'm CBS 12 Storm Track meteorologist Zach Kobe. Factor in the humidity levels. We're talking about heat index values between 97 and 105. Better rain chances to our north, Indian River, Okeechobee, St. Lucie counties, but a straight shower storm this afternoon is possible.
This report is sponsored by Indeed.com. Finding a great hire can be a challenge. That's why there's Indeed. Their powerful hiring platform makes it easy to attract, interview, and hire candidates. Visit Indeed.com/credit and get $75 toward your first sponsored job. Terms and conditions apply.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 973-7828 or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
You wouldn't drive a car under the influence, so why would you operate a boat? The FWC wants to remind you that operating a boat while impaired is just as deadly as driving a car and carries the same penalties. Be as safe at sea as you are on land. Visit myfwc.com for more info.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Hey, this is Jimmy D, also known as Jim DePola, your realtor and team leader for the Florida Home Pros with Keller Williams Innovations, and also your host of Florida Talk Real Estate, the longest running real estate show in Florida, and we're proud of that. And thank you for all the fans and the listeners that have kept us going through 10 years now. We started this show 10 years ago, so this is awesome. So thank you, guys. And we got a great lineup today for you to answer any questions you have. We're just one phone call away live at 877-927-6969. If you want to call us out there, all you have to do is go to Florida Talk Real Estate. You can catch us anywhere on there. Just Google it, Florida Talk Real Estate. Or you could call us off air at 888-973-7828. We always have a live human being answer your call, takes down your information, and then we will call you back as soon as we can get back to you. More information you leave, the better. Today we have a great lineup. It's Mike Rauch from the mortgage firm. How's it going, Mike?
Going good. And how about this? We picked up a brand new viewer / listener today, Maureen, right? So she just came across us somehow. So that's pretty cool.
She's in New York, which is very, very common. Who would have thought that people from New York are thinking about moving down here to Florida, right, AJ?
Yeah, only since I was born.
AJ is an appraiser extraordinaire, born and raised here in Palm Beach County. He's always a great addition to the show, really gives us really good insight. He gave us really good insight early on the show about like understanding like a kitchen upgrade and some other types of upgrades and how to understand the values of that. And if you missed that, you want to learn about that, just go back and check the show later. And then, of course, we've got Ross Komarinetz, Hot Ross.
Good morning. If you're listening to New York, the insurance rates, I'm glad I talked over that. If you're listening in New York, the insurance rates in Florida are higher than what you pay in New York. So just be aware.
Yes.
When you go, that's high, and I say compared to what, and you say New York, that's not a comparison.
Exactly. We had a mortgage broker that was qualifying a buyer for one of the properties that we listed. And the mortgage broker, because they were in Ohio, one of the first questions I asked the buyer's agent was, what do they budget for homeowners insurance? And what do they budget for taxes?
Yeah, taxes is another one. If people don't realize, we have these homesteaded properties and a lot of agents will just list an MLS what the current taxes are. That is nothing like what you're going to pay if they've owned it for 4 years.
Yes, and if your agent isn't talking to you about that too, and if they're not talking, if you're a seller and you're selling a house and buying another house here in Florida, and your agent doesn't talk to you about the words portability, you've got the wrong agent. Okay?
You turn that into like three words, portability.
Portability, yeah. Listen to my 3 favorite words when it comes to property taxes, portability, right? So the thing is look, you can get discounts from if you've been homesteaded a long time on your home and you're buying another home in another part of the area, you can get credits for all that homestead you built up on your first home and kind of transfer it over to the second home. So even though the price might be much different on the taxes for the second home, you still get recognized for all the time that you had the homesteading on the other house. And there's a mathematical calculation. I'm still trying to get the I'm still trying to get the property appraiser on the air, somebody from the property appraiser's office, to ask him a whole bunch of questions about this stuff, which I think would be a great show. But yes, so you're right. Taxes are a big deal too. So people from out of state, we do things differently down here in Florida. Duh. That's why I have a little channel on my YouTube called Only in Florida, and we love it because I do love Florida. I wouldn't be here. But look, I want to talk more about appraisals and the market and things, but we got to get to Scott because we're almost done today, and he has an open house today. So let's talk about Scott's open house. Hello, Jimothy.
Hey guys, good morning.
Oh, there he is. Okay. Hey, Scott, how's it going?
Good. Jim, I should have known that you would have invited AJ the appraiser on this week after all of the fun that we've had with appraisers for the past 2 weeks. It was about due for him to come in, wasn't it?
Yeah, absolutely. So the house on Winchester. Now, I haven't seen it since it's been fixed up. So let me just give background on this house. One of our most fervent fans of the show really appreciate it. They had their mom needed to sell a property, so they came to us to sell the property. It was basically a 2-1 with a bonus room, and it's in a really good neighborhood. But it was the 1950s house, CBS. It was good construction. It had really good bones, but it needed a lot of work. I haven't seen it since, so we put it on the market. Then one of Scott's buyers ended up buying the property. They fixed the house up, and now they put it back on the market, Tom. So the house looks pretty good, Scott. I'm looking here at the listing right now. Tom, as always, did a really good job renovating it.
Yeah, absolutely. We've worked with Tom on several properties over the past few years, and he always does a dynamite job. You know, you can really tell when you go into a home that is quote unquote a flipped house that, you know, a lot of times it's what I call lipstick on a pig, where they really don't do a very good job on renovation and the work is shoddy and the materials are shoddy. Tom, he's been working with the same contractors and subcontractors for years. He's got it down pat. He's using, you know, quality goods and really puts out a fine product. But yeah, guys, today I'm going to be at 4339 Winchester Lane. Central Palm Beach County, conveniently located to Southern Boulevard, I-95, Turnpike, Palm Beach International Airport. This is now a 3-bedroom, 2-bath home. It's got a metal roof from 2019. It's in great shape, so insurance, no issues. We've got a newly updated kitchen, new quartz counters, new stainless appliances, luxury vinyl plank waterproof flooring throughout the entire home. Fresh paint inside and out. Really dynamite home. It's a non-HOA neighborhood. There's plenty of room to park a boat, plenty of room to park an RV, so you can bring your toys. It's available for a quick closing, and I'm going to be out here again. That's at 4339 Winchester Lane in West Palm Beach today from 11 a.m. to 2 p.m.
Excellent, Scott. You know, one of the things I really like about that house also is the fenced-in backyard. It's not like a gigantic yard or anything, but the fenced-in backyard really offers some really nice privacy, and it's got a really nice shaded like open-air lanai, which is really nice also on the backyard. And I know it's got some fruit trees in there, and I don't remember, but you know, the house is I think it was built in the 1950s or 60s, if I'm not mistaken, 1957. Yeah, 1957. So the landscaping is very mature, and that's, to me, that's always a big bonus.
Yeah, absolutely. And also, I forgot to mention too, it's got a detached garage building too. You know, it wouldn't fit my truck, but it would probably fit Mike's Prius. You know, it's a small 1-car garage, you know, so it's got an extra storage, could be a workshop, you know, solid building. And I forgot to mention that initially.
Yes. So Scott will be there from 11 o'clock to 2 p.m. 11 a.m. to 2 p.m. 4339 Winchester Lane. If you're driving around and you're trying to think about where to go, don't freak out. All you got to do is go to Florida Talk Real Estate Facebook page. You'll see the posting for the open house there. You could find out more information. If you can't get over there and you want to find out more about it, just reach out to us through Florida Talk Real Estate. and just say you want to find out more information. We'll have Scott call you back on the property. So Scott, do me a favor, sell that house.
I'm looking at the pictures, Jim, right now, and I'll tell you what, that guy does. That guy does really.
I gotta put up some time. Have a great rest of the show.
Okay, thank you.
See you, Scott. I was gonna say the guy really does nice interiors on the homes.
Yeah, he does. Tom does a really nice job. And this house, because it's got a 2019 roof, the AC is very new. I don't remember the exact age of the AC, but it's less than a couple years old, if I'm not mistaken. And the fact that it's got a brand new kitchen and brand new bathrooms and the appliances are brand new. This really is a turnkey property. You just come in, you move in, you enjoy it. You don't have to worry about crazy insurance problems. Your roof's 2019 and everything's been upgraded. So it's a really good value home for somebody. So I know somebody's going to get a lot of enjoyment out of that. And good luck, Tom, on the sale of the property. You're in good hands with Scott. Okay. So let's talk a little bit more about the market in general today, because there are so many things. Now, I'm sorry, do we have another call?
Your calls.
I'm sorry, I didn't even know about that. Okay, let's take the calls.
Right.
Calls are always priority, so let's go to the calls.
Oh, all right. We're going to start with Tom. Tom has a homeowner's insurance question. Tom, welcome to Florida Talk Real Estate.
Welcome, gentlemen. Good morning, gentlemen.
Hey, Tom.
I came in on the show a little late today. Usually get on earlier listening about the insurance. I'm a FedNat, or I was
Former
a FedNat.
customer. A FedNat former customer. Did you get dumped?
Yeah.
Yeah, I'm sorry.
And it's amazing that I get dumped because I had a leak in my kitchen a few months ago, and they sent out an appraiser, and they wanted $23,000. That's what they appraised it for, to repair it. And I have a friend of mine that's in remodeling, and he did it for $7,000. And I think it's amazing that, all of a sudden we try to save them money, and then we get screwed over for one.
Yeah.
And this special session that the governor's going to do is just going to help the attorneys. It's not going to help anybody else.
I don't know how that's. I don't know how that's going to turn out either.
I don't think anybody would be surprised if whatever they come up with in the in Tallahassee doesn't really benefit consumers. I won't be surprised if that's the outcome. But,
yeah.
That's interesting. I would say.
Commission.
Yeah, I would say Tom's case is unique, where he's basically telling the insurance, "Hey guys, I really don't need that much on this claim. I just want. This is what it's going to take. We're not going crazy." So
what is Tom? Did you find a new policy yet? Is that one of the reasons why you're calling?
The only new policies available are Citizens.
Right. So did you get the policy already? Did you get your policy to replace it?
I'm sorry?
I'm sorry. Did you get the policy to replace it? Have you already signed up with Citizens?
No. I mean, I've read about it in the paper on Monday, talked to my insurance agent on Tuesday, and he confirmed on Wednesday that, yes, I was one of the ones getting dumped. And Thursday, I got the letter in the mail. Conveniently, they do it right at the beginning of hurricane season. When it used to be, because my brother used to sell insurance, that they had to do it if you pay for a year for the policy, they couldn't cut you until the policy was completed, which mine was paid in full through the end of the year. So,
right.
Which was paid in full with their 25% increase.
I mean, you might correct me if I'm wrong, Ross, but that probably is the normal course of events. But if they're going out of business,
Yeah, I mean, well, the first 90 days, that's kind of the underwriting period for a policy, and they can kind of cancel you for any reason. There's certain amount of days that they have to notify you for certain things. If they're going to cancel or non-renew, this is kind of I would say a unique scenario, except it's a unique scenario we've seen played out the last few years.
Right.
I have some of my clients just bought their house last month. They just bought their house last month, got a Federated National Insurance policy, and they're on the list of being canceled. So I don't think it really has anything to do with the claims or, it's all about reducing their exposure. Yeah. And, unfortunately, the homeowners insurance industry in Florida is the only industry on the planet that does not want new customers and is actively trying to get rid of the ones they have. So,
so we're not seeing this like all across the country. We're not seeing this like in flood zones in the Midwest or forest fires in California. We're not seeing the same kind of things.
I don't believe so for flood zones. That's more of a FEMA and National Flood Insurance Program issue. Mm-hmm. It's not really an insurance company issue because FEMA underwrites it. The insurance companies just kind of service it. Mm-hmm. So, I don't think you're seeing the same disaster that we're seeing here, just because, everybody that's moving from California where the wildfires are amazed at how expensive everything is here anyway.
Mm-hmm. Hey, Tom, thank you so much for calling. I hope you become a longtime listener. If you need any help, it sounds like you're cool with your insurance agent, but if you need a second opinion or anything, Brightway Insurance is here for you. Okay, we're not high pressure, so we're not trying to steer you in one way or the other. But if you want another quote, Ross is here for you.
Okay, Ross, you do anything besides Citizens?
Yeah, I mean, we write with every single company. It's just all about who's going to insure your particular house.
Yeah, so we have to go over details. And Ross will be honest with you. I've seen him many times. If he doesn't think he can beat what you got, he'll just tell you stay with it. Mike's like that. I'm like that. We're all like that. So whatever's the best deal for you, that's what you should do.
Real quick, somebody emailed me trying to save a deal that they had closing yesterday. Probably on Wednesday, and they sent me a list of like 15 denials that they got from other companies, and we were able to get a different company that wasn't on that list to insure them.
Yeah, that's Brightway Insurance, Juno Beach. Don't just go to any Brightway, Tom. You got to go to the Juno Beach office with Ross.
They made it easy for you, Ross. I already told you the 15 that you shouldn't be researching.
That's right. Yeah, that's right.
You're only looking for one yes. We got just a little bit of time, tiny bit of time. So let's try to get that last caller in, Jimothy.
Sure thing. David, welcome to Florida Talk Real Estate.
Hey, thanks for having me. I just want you to have your insurance guy call me for a quote because I'm another FedNet trauma victim.
Sure, I know. Well, we got. I'm sorry. Go ahead.
Positioning myself pretty well. I'm out in the farms. I know you mentioned that earlier. Kind of difficult out there for insurance for various reasons. Just have your insurance guy call me.
We will, David. You left the information with Jimothy?
I did. Yeah, I gave my phone number.
Great. We'll call you off there.
For 15 years or whatever, thousands of dollars every year, and then this is the things you get, and it's the same thing when you make a claim, they just bite you tooth and nail,
Mm-hmm. So. I know. I'm sorry. Sorry you're going through that.
I don't know.
Yeah,
I was going to say, Jim, that's just a really good example. Sometimes we get lost because we're doing lots of deals for individuals, but it feels very personal for these people, right? That are it's like, you're canceling me after I've been such a good client of yours. Mm-hmm. And unfortunately it's not personal, right? It's just, these are very broad strokes that these companies are having to make. It's crazy.
It's crazy time. So we just found 2 of the 70,000 that are being dumped by FedNat.
I got plenty more. I got plenty more in the back.
Oh, I know you do. I know you got tons. So we just found 2 more. We just got them out of the closet. I'm sorry, everybody. Everybody's going through that. I'm sorry. One of the things you're going to know about this show, we've been through the up markets, the down markets. We've been around 10 years. So we know how to work the markets when things change. This is not the first time we had insurance crisis. We've had insurance crisis at least one other time since we've been on the show. We help people. We've only got 1 minute left, so let me just wrap it up. Florida Talk Real Estate podcast is the #1 real estate podcast in the state of Florida. It's the longest running real estate radio show in Florida that I know of. Okay. We cover 6 counties just with our team, all the way from Indian River County down to Dade County. The Florida Talk Real Estate Show is a team of professionals. We've got Mike Rauch from the mortgage firm, Ross Komarinetz from Brightway Insurance, Juno Beach. We've got Trident Title, right? We have access to the Krasker Law firm for help, which he's helping us with a bunch of stuff right now. We've got AJ in our back pocket once in a while to give us the real deal on appraisals with no BS, and that's what I love about that guy. So if you need anything, we're one phone call away, 888-973-7828, or just go to Florida Talk Real Estate on Google. You'll find us everywhere. Guys, have a good weekend.
Thanks, everybody.
Thanks.